A recent IMF report paints a less than rosy picture of the economies of Estonia, Latvia and Lithuania. You're watching Dukascopy TV. I'm Sophia Aribo. Joining me on the line to discuss whether the Baltic tiger has turned into a pussycat is CEO of Trigon Capital, Joakim Helenius. Joakim, the latest GDP figures for Estonia show negative figures for year-on-year and monthly growth, minus 1.9% and minus 1.2% respectively. The IMF report noted that the Estonian economy is threatened by rising wages and prices. Does all of this paint a gloomy picture for Estonia right now?
I think that the entire Baltic region is impacted by the uncertainty that's really following from the crisis in Russia and Ukraine. The Baltics are all dependent on the Russian market for a significant part of their goods and services exports. And clearly the impact that the Ukrainian crisis and the sanctions that go with it will have on the Russian economy, both psychologically and practically, are going to be very significant. Nobody knows how significant yet. Estonia is also impacted by the slowdown in the Finnish economy. So it's been given a bit of a double whammy. I think otherwise the increase in wages that we've seen in Estonia over the last 2 years especially is slowing down. Underlying competitiveness is not bad, but there has over the last 2 years been slippage.
According to the IMF, the Baltics are held back by a shortage of credit. How big a problem is this?
I think there is not so much a shortage of credit as there is a shortage of demand for credit. I think, Baltic companies, partly as a result of the pain that the companies and the economies as a whole underwent back in 2008, 9, 10, are very cautious about committing themselves to new investments. As a result, the increased uncertainty in the region here has led companies to slow down on investment projects they may have had. Credit is available. Banks are lending. Terms are maybe not the most attractive, but the money definitely is there. What we're seeing here is a dramatic, or I would almost say dramatic, increase in liquidity in the Baltic countries, which means that when sentiment changes, we could see some very rapid growth again. Other than that, on a macro side, I think what I hope that we'll be seeing very much is a shift in exports away from Russia.
Latvia enters the euro area with the fastest rate of growth in Europe, and market confidence is high, but investment has slowed down recently. What factors have played a part in this, Joakim?
Of all the Baltic countries, Latvia is the one that will suffer the most from the Russian crisis, from the expected dramatic slowdown in Russian growth. I think Latvia will find it the most difficult of all the three Baltic countries to quickly replace the business they've been doing with Russia. The Latvian banking sector has been a big beneficiary of capital outflows out of Russia and took over a significant part of the sort of offshore banking business for Russian after the Cypriot crisis. Estonia and Lithuania are less dependent on Russian-related business, but they of course are much more dependent on it or affected by it than the countries further west. The dramatic increase in growth rates that we've seen in Latvia over the last couple of years is likely to slow down quite dramatically, and as a result of this, the Latvians will have their hands full, trying to find alternative business opportunities away from Russia.
And lastly, how is the future looking for the Baltic economies?
The underlying competitiveness of the Baltic economies is rather good. The Baltics carried out an internal devaluation in 2008, 2010 that was unparalleled, and this basically set them up for the sort of growth that we've been seeing lately. And whilst maybe in the last 2 years there's been a little bit of slippage as wages have started to rise again, as unemployment rates have come down very sharply, and nevertheless, underlying all these short-term problems, which are mainly Russia-related, in the medium to long term, I think the Baltics are extremely well placed to be the fastest-growing region in Europe.
Thanks, Joakim. That's all we have time for. You've been watching Dukascopy TV. Goodbye.